Hello. Topic for today is, can China really stop buying US Treasury yields? So, to start with, over the last 2.5 years or so since Trump became the president of US, people across the globe have been speculating that if Trump starts a trade war with China, which he has a year ago, then one of the ways in which China can retaliate is by reducing U.S. by reducing its purchases of U.S. Uh, uh, treasuries or government bonds. So, is it really possible? To start with, I would like to say it's really not possible. I- China is a current account surplus economy, and so it runs a capital account deficit. It has huge reserves, and it's the only way. There are two ways in which it can utilize its reserve. It can actually use it for purchasing or invest it into gold or safe haven assets like U.S. Treasuries. So why not? Why aren't they investing? The question may cross your mind that why not China just dump or use all of their reserves to buy gold? The simple answer is that if they start buying gold like crazy, gold can actually end up becoming a medium of exchange or a monetary unit, and no central bank in the world wants to do that. That is the reason precisely why they hold gold reserves, but they hold in such a way that they can manipulate the price anytime they want, but not so much that just by looking at central bank data, people would start forgetting the fiat and move to gold. Second way which they can use their reserves is by increasing the money supply in the domestic economy, which they certainly don't want to do because it has created massive imbalances since 2011. So the only option they have is to invest in safe haven bonds, which are someone might say, okay, why don't they buy Swiss bonds or German bonds? They are equally safe. I beg to differ. German bonds are safe haven bonds, but in eurozone. Compared to U.S. Treasury yields, I would still call German bonds as risky assets. Swiss bonds, I'm not so sure whether Swiss bond market is as deep or as big as U.S. Treasuries. So the only option they have is to buy U.S. Treasuries. Now, can they actually stop? See, if they reduce their purchases, indirectly means they have to boost purchases somewhere else. So let's say if they trim their purchases of U.S. Treasury yields, then someone else is going to be the recipient of Chinese investment into government bonds. Most probably Germany, but as I said, Germany is not stable, so money might flow into gold, which which I think it's actually beginning to flow into gold, and maybe some other bonds, but I don't really see an option. But consider this: let's say if China, reduces its purchases by a staggering 50%, what it indirectly means is that the demand for the US dollar or the bid on the US dollar has weakened, and that indirectly that means if there is huge drawdown in Chinese purchases of US treasuries, the dollar will fall drastically. Now imagine in a trade war, China would want their currency to remain weak and US dollar to remain strong. So, uh, actually reducing the purchases of treasuries is not going to help Chinese. In fact, it will hurt them more if you think, because if they reduce treasury yields, the dollar will drop, Chinese yuan would go up. Instead, I would, in fact, one way of keeping yuan low and in such a way that US won't be able to complain is by boosting treasury purchases. Also, remember that if, let's say, if China does reduce its purchases of treasuries by 50%, dollar will crash and the manufacturing in the US would improve. So their current account deficit would come down automatically, and they wouldn't have to run massive fiscal deficits because a drop in the current account deficit would eventually have a positive effect on the employment as well. And so their reliance on stimulating their economy artificially via fiscal spending would go down. So all in all, it would be a net win for United States instead of a big loss for US. By no means it's a loss for, it would be a loss for US, and that is the reason I think it's simply not practical to think that China can drastically reduce US Treasury purchases unless and until equally strong option emerges. But as I said, even an equally strong option emerges, US would be more than happy to allow China to shift their focus because the dollar would weaken and the US economy would improve. So what's the way out? I think this trade war would continue. It's not going anywhere. Both parties know that a severe escalation is not severe escalation is not in anybody's interest. So they would keep playing around this negotiation thing, and eventually markets would be exhausted. Similar to the fiscal cliff back in 2012, I think fiscal cliff had become a huge issue. But since then, every time US hits debt ceiling, the interest is just gone. Now markets don't really care, and same thing would happen. This trade war can keep going on. It won't escalate severely, but then there won't be any respite either, and eventually markets would just it would become a new norm. So that's it for today. I hope you enjoyed. Thank you.